Good evening, TheoTrade. This is Corey Roseblumen. You're watching the Theo Nightly video for September 26th, 2019, as we push toward the end of the third quarter and the end of September. October is just around the corner. But first, we want to talk about the S&P, which is into a critical pivot. As discussed earlier, we had a reversal bounce, that's a short-term play at least, off of this roughly 2950 level. It is your 50-day exponential moving average. More importantly, though, it is a trendline price support pivot. So we're looking at that into the remainder of this week for any type of bullish bounce. And we have the alternate thesis, or I guess I should say the bear thesis, which is, will this be the third big downswing in 2019? So the other times we had that, especially up against, well, really into April, against 2950 in the SPX, was here. And we did get that similar divergence, resistance, push down to the 50 exponential, a little bit of a hold, and then good night, which was a collapse. The next move was down against the all-time high, and that's about 30.30 in the index. And again, we had a up, down, up, and then good night. And down the market went. The box, the consolidation, the volatility box, rectangle, did give way to a gap and surge up against 2950. And that fell just shy of a new all-time high. In tonight's video, we're going to focus on these levels, these pivots, and what to do for the remainder of this week, especially into early October. And just kind of a cut to the chase. That is a bear departure play beneath 2950, which opens up a pretty quick sell swing down to 2850 or 2811 gravity. And of course, 2900 as a midpoint, as a reference point. So if that doesn't work, doesn't happen, we're going to see the market stabilize off of 2950. So however you are watching your charts and trading your positions, please keep a close reference on 2950. To keep an update on the stocks at the edge of the cliff, Amazon keeps at that cliff. So Thursday's or Tuesday's video, we had this will it or will it won't. And Amazon gave a one-day bounce, but we are right back to where we were on Tuesday. So those comments, the plans, the positions still are in motion with respect to 1740 and the 1700 and not much beneath to support Amazon shares. And of course, those are on Tuesday night's video. I do want to look once again at stocks making new 52-week highs in this environment. And there actually are more than I would have expected, just a quick scan. This again is our new yearly high scan. We're scanning in the S&P 500, and we're looking at, I'm just sorting by sector, which is where is the strength coming from? Is it in our offensive names, which would be financials and technology, and some discretionary names, and the others would be the defensive sectors, which would be utilities and some others. So what's going on? Well, we've seen this before. The strength in the market at the highs is actually from defensive names. That's still not a good sign. And from Don's video last night, we are preparing ourselves for higher volatility environments, especially into October. And the writing is on the wall. Now, this is a behavior or money flow or general dynamic, if you will, that is bearish. So we will be watching these closely. There may be opportunities for trades in these stocks, but just keep watching these, which are S&P stocks making new 52-week highs. And in some cases, new all-time highs. The concentration of them is and remains in utilities, which we'll see just in a moment here. Otherwise, we have D.R. Horton, we have Pulte, and Whirlpool. Will we consider Whirlpool a consumer discretionary stock? That's your home appliances and dishwashers and all those sort of things. Not necessarily something you might think of if you're thinking of risk on or offensive stocks like vacation stocks, travel stocks, leisure stocks. And that's the difference between a staple, which would be Procter & Gamble, bathroom supplies, toothbrushes, shampoo, things that you use all the time. And those are going to do quite well during a good economic condition or a bad one. versus other names like retail names, tech names, and financial names. And you just aren't seeing that. The other standout would be real estate stocks. Taking a quick look, just randomly selecting, we mentioned Whirlpool, and that is a choppy stock. It is a defensive stock, if you will, but it's a stock that's making new 52-week highs in a rising implied volatility environment. And that is a new gap and go scenario, and our probability of expiring cone just got wider. Northrop Grumman is a defense stock. The last time we focused on it was at 320 or 325 per share. It was a recommended pullback or flag buy, and that's given us 1, 2, maybe 3 additional bull flag positions just on their most recent one, which is a pullback. So in these pro-trending or uptrending stocks, these are purchasable or put positions on, or put call positions or spreads is recommended, in out spreads particularly, on the pullbacks of these rising moving averages. And again, this concept is strong stocks tend to get stronger. Stocks that are weak tend to get weaker. And we have otherwise Kimco, and I won't really go through all the names. We have a scan for that, and this is just listed by the sector. Over here, I just have it sorted on an intraday basis for percent change, but it's the same stocks, new yearly highs in the S&P 500. And by the way, those are 31 stocks that are making new 52-week highs right now. And I'll just go quickly through some of these. CINF, which is Cincinnati Financial. That's a financial company. Interesting. Nonetheless, it remains in a strong, positive, rising uptrend. Other stocks are realty stocks. Edison is a utility. It's Edison International. That again just made a pullback. So again, what are we looking for? What's the point of these type of scans or strength, strong stocks? Find stocks or identify, quantify stocks in rising trends, and then wait to purchase or put on positions in the direction of the trend on pullbacks. You might call them flags. You might call them touches of moving averages or touches of trend lines. Procter & Gamble, we just saw that one. And might I add, this is impressive. And it's just a stellar performance of a stock that most people don't think about. It's pretty boring. It's household supplies. Nonetheless, it continues this, we call this a creeper trend. It's neither impressive, it's neither flashy or whatnot. It's just a steady little creeper rise, flying beneath the radar. Nonetheless, it is providing profits consistently to those who are trading long in it. And we at TheoTrade don't really discuss long-term positions and investments, but still trading tactics is to identify strength and buy those pullbacks. So that is a consistent winner, at least for the structural movement there. And that will be the case until it does break or reverse. And we're going to use moving averages or just trend lines like this. We can even update these to quantify what we call structure. And structure has to do with the highs and the lows. Other stocks, too numerous to name, CMS Energy and the others on the list. So that's just a quick look at trending stocks, and these that are getting strong, breaking out to new highs. Duke Energy, we mentioned that sometimes. Lam Research and Essex Property Group and Intergy. Try saying that 20 times fast. Intergy. And we'll end with that. But just keep these in mind as you are trading, as you are scanning, and we'll end with the broad equity market viewpoint. So with the S&P, we are into this 2950 or 2955 pivot. In the Nasdaq, we're still watching this. We'll update our trend line, 7,600 and 8,000. So we're chopping between those. And in the Dow mini futures, just shy of 27,500 and 26,600, 700. That Russell still remains weak. So this was a called out short sell opportunity against 1,600. And that is playing out on the intraday basis and for in-out spreads and bear put verticals. So this remains in a trading range, but it too is working off its midpoint, which is about 1550 on the index. Lower point is 1500, and ultimately, probably better reference level beyond 1500 is 1450. So as we go to the end of the third quarter, the end of September, and the beginning of October, these are all our names to watch with caution. And of course, we always put risk first in our trades. Be careful, be safe. This is Corey Rosenblum with your Theo Nightly video for September 26th, 2019.